Think investing in the stock market is only for the rich? Not anymore. In this video, I'll show you exactly how to start investing in the S&P 500, even if you only have a few dollars. Yes, it's real. Yes, it's doable. And yes, it's beginner-friendly. We're going to be diving deep into what the S&P 500 is, how it works, and why it should be a cornerstone of your investment strategy. I'm going to walk you step by step through the process of getting started, even if you're starting from scratch. By the end of this video, you'll have the knowledge and the tools to begin building real, lasting wealth. So, if you're ready to take control of your financial future, let's get started. Okay, so what exactly is this S&P 500 everyone keeps talking about? In the simplest terms, the S&P 500 is like the all-star team of the stock market. It's an index that tracks the performance of 500 of the largest publicly traded companies in the United States. Think Apple, Microsoft, Amazon, Google, the heavy hitters, the companies that are basically running the show. When you invest in the S&P 500, you're not picking and choosing individual stocks. You're buying a tiny piece of all 500 of these companies all at once. It's like buying a diversified basket of America's top businesses, which is way less risky than putting all your eggs in one basket, right? Now you might be thinking, Fitzroy, I don't have thousands of dollars to throw around on stocks. And you know what? That's totally fine. You don't need a ton of money to get started. In fact, you can start investing in the S&P 500 with just a few bucks. We'll get to that in a minute. But first, let's talk about why the S&P 500 is such a big deal. Historically, the S&P 500 has returned an average of around 10% per year. Now, I know past performance doesn't guarantee future returns, but that's still a pretty solid track record. Over the long term, the stock market tends to go up, and the S&P 500 gives you a piece of that growth. Plus, it's a much better way to grow your money than letting it sit in a savings account earning next to nothing. Think about it this way, if you had invested $100 in the S&P 500 50 years ago, you'd be sitting on a pretty penny today. Of course, there are risks involved with any investment, but the S&P 500 is considered a relatively low-risk investment, especially over the long term. So, whether you're just starting out or you're a seasoned investor, the S&P 500 is a fantastic way to build wealth and secure your financial future. Alright, let's get down to the nitty-gritty. How do you actually start investing in the S&P 500, especially if you're on a tight budget? Well, it's easier than you might think. Step 1 is to choose an investment platform. Now, there are a ton of options out there, but some of the most popular and beginner-friendly platforms include Robinhood, M1 Finance, Fidelity, and Vanguard. These platforms make it super simple to buy and sell investments, and they often have low or even no fees. Once you've chosen a platform and created an account, you'll need to find an S&P 500 index fund or ETF. Don't let these terms scare you. They're just fancy ways of saying a way to invest in the S&P 500. Some popular options include VOO, which is Vanguard's S&P 500 ETF, FXAIs, which is Fidelity's S&P 500 index fund, and SPY, which is another popular S&P 500 ETF. These funds essentially track the performance of the S&P 500, so when the index goes up, your investment goes up too. Now here's the best part. You don't need to buy a whole share of these funds, which can sometimes cost hundreds of dollars. Many platforms offer something called fractional shares, which means you can buy a portion of a share with as little as $5. That's right, you can start investing in the S&P 500 with just $5. It's like buying a slice of pizza instead of the whole pie. You still get to enjoy the pizza, but you don't have to shell out for the whole thing. Once you've found your S&P 500 fund and decided how much you want to invest, it's time to set up recurring investments. This is where the magic really happens. Recurring investments mean that you're automatically investing a certain amount of money on a regular schedule, like every week or every month. This is the key to building wealth over time, even if you're starting with small amounts. By investing consistently, you're taking advantage of something called dollar cost averaging, which helps you buy more shares when the price is low and fewer shares when the price is high. It's a smart way to invest, especially for beginners. So there you have it. Investing in the S&P 500 doesn't have to be complicated or expensive. With a few simple steps, you can start building your financial future today. Now you might be wondering, Fitzroy, why the S&P 500? Why not pick individual stocks or invest in something else? And those are great questions. The S&P 500 is considered a smart long-term strategy for a few key reasons. First of all, it's inherently diversified. Like we talked about earlier, when you invest in the S&P 500, you're investing in 500 different companies across a wide range of industries. This diversification helps to reduce your risk. If one company or one sector of the market isn't doing so well, it's not going to tank your entire portfolio. You've got 499 other companies to pick up the slack. Second, the S&P 500 has a long and impressive track record of growth. Over the past 90 years, the S&P 500 has delivered an average annual return of around 10%. Now remember, past performance is not indicative of future results, but it does show that the S&P 500 has a history of weathering storms and coming out on top. Third, investing in the S&P 500 is incredibly easy and accessible. You don't need to be a financial expert or spend hours researching individual stocks. You can simply choose an S&P 500 index fund or ETF, set up recurring investments, and let your money grow over time. It's like putting your money on autopilot. You're not constantly checking the market or trying to time your investments. You're simply trusting in the long-term growth potential of the S&P 500. And finally, the S&P 500 is a great way to benefit from the overall growth of the U.S. economy. These 500 companies represent a significant portion of the American economy, so as the economy grows, so too does the S&P 500. So if you're looking for a relatively low-risk, long-term investment strategy that has the potential to generate significant returns, the S&P 500 is a fantastic option. It's a great way to build wealth, reach your financial goals, and secure your financial future. Chapter 4. Tips for staying consistent, especially if you're broke. I know it can be tough to stay consistent with investing, especially when you're on a tight budget. But trust me, consistency is key when it comes to building wealth. So, here are a few tips to help you stay on track even if you're broke. First things first, start small. You don't need to invest hundreds or even thousands of dollars right away. Remember, you can start investing in the S&P 500 with just a few bucks thanks to fractional shares. The most important thing is to just get started and build the habit of investing regularly. Next, automate everything. One of the best ways to stay consistent with your investments is to automate the process. Most investment platforms allow you to set up automatic deposits and recurring investments. This way, you don't even have to think about it. The money is automatically invested for you, like clockwork. Reinvest your dividends. When you invest in dividend-paying stocks or funds, you'll receive regular payments called dividends. Instead of spending those dividends, reinvest them back into your investments. This is a powerful way to accelerate your wealth-building journey through the magic of compound growth. Don't panic during market dips. The stock market is going to go up and down. That's just the nature of the beast. But don't let short-term fluctuations scare you out of your long-term investment strategy. Remember, you're in it for the long haul. The best thing to do during a market downturn is to stay calm, stick to your plan, and maybe even consider investing more if you can. Use no-fee brokers. There are a ton of great no-fee brokers out there these days, so there's no need to pay unnecessary fees. These fees can eat into your returns over time, so it's best to avoid them altogether. And finally, remember that building wealth is a marathon, not a sprint. It takes time, patience, and consistency. Don't get discouraged if you don't see results overnight. Just keep investing consistently. And over time, you'll be amazed at how much your wealth can grow. Chapter 5. Recap and motivational call to action. So, there you have it, folks. Investing in the S&P 500 is one of the simplest, most effective ways to build wealth over time, even if you're starting with very little money. You don't need a finance degree, you don't need to be a stock market expert, and you certainly don't need to be rich to get started. All you need is a smartphone, a few bucks to spare, and the willingness to learn and grow. The S&P 500 is your gateway to financial freedom, and it's waiting for you. Now I want to hear from you. What are your financial goals? How much are you planning to start investing in the S&P 500? Let me know in the comments below. And if you found this video helpful, please give it a thumbs up and subscribe to invesYou for more videos on personal finance, investing, and building wealth. Chapter 6. End Screen. Thanks again for watching. Don't forget to check out these awesome videos next. And remember, your wealth, your way. See you in the next video. Outro. invesYou, your wealth, your way. Look, I used to think that investing was only for people with a ton of money just sitting around, but the truth is, the earlier you start, the better, even if it's just a few dollars here and there. Compound interest is a powerful thing, and time is your greatest asset. The S&P 500 is like the ultimate set-it-and-forget-it investment. It's low-cost, diversified, and historically delivers solid returns. So what are you waiting for? Take that first step towards building your financial future today. You won't regret it.